Hello everybody, welcome to MFX Trading YouTube channel. Today I want to talk about the candlesticks and everything that's needed to be able to read them properly. These days people overcomplicate things a lot by giving them names like morning star, shooting stars, etc. This is totally unnecessary if you understand the real meaning of the candle. Before we start, don't forget to hit and like the subscribe button and click the notifications bell to get notified on our new videos. So let's start with the basics and explain the fundamentals of a candlestick. In the end of the video we will go over some live market examples. So when we have let's start with a bearish candlestick. You have your body, and let's just stick with the red and the green candle. The red means a bearish candle, and bearish is a down candle, and the red of the green means a bullish candle. That's an up candle. So then first we have the body of the candlestick, and in a red example means this is the opening of the candlestick, and then right here this means the closure of the candle. Then we also, with most candles, we have a wick. Let's make that line solid, and also to the downside most of the times. The wick is basically just the high or the low. This one is the high, and then this one is the low. The low and the high is basically just the low and the high of that whole candlestick. If this, for example, is a 1 hourly candlestick, then this is the 1 hour high and this is the 1 hour low. And within this candle, price tells you a lot of inside information. Because if this is a 1 hourly candle, inside there are 20 5-minute candles. And the same with a bullish candlestick, which in this case we make green. Exactly the same thing. This are basically reversed. This will be an opening now, because you open on the lower side of the bullish candle, and you close on the upper side. For the highs and the wicks, it's basically the same. Let's draw the wicks. Then this is still the high, and this will be the low. And this always, like I said, this always forms on the time frames you got selected. If you have a daily time frame, for example, this one whole candle will represent a whole day. If you got the 50-minute time frame selected, then this whole candle will represent 50 minutes. And this can go up from the 1 second time frame, which we also use in our mentorship, can go all the way up to the monthly and even to the yearly time frames. And that's also why it's really important. You use a set of different time frames, simply because that one candle can hold a lot of information inside, which you won't be able to analyze correctly with just looking at one candle. If you have an hourly candle, for example, there are 25-minute candles inside. So if you zoom down to your 5-minute, you have a lot of more information which you can use to base your trades on, for example. Then we have the colors of the candle. I use for the and that's also a standard thing. If you make a TradingView account, it's always just red and green. But a lot of people nowadays they change their colors of the candles. But the important thing is, it doesn't matter which color you use, but it's important that you understand what the color stands for. The standard is, like I just said, red and green, and a red candle is a bearish candle down, and a green candle is a bullish candle when price goes up. We at MFX, for example, use red and gray, and like I said, it doesn't really matter what color you use as long as you're able to know the difference between them. And it's simply just supply and demand. A red candle represents selling pressure. So right here is the opening. And when the candle closes right here, you printed a red candle. So what does that indicate? Selling pressure. There are sellers coming in. Price is moving down. And same with a bullish candle. There is buying pressure in this case. Price opens at the low, prints a green candle, closes right here or makes a high, retraces a little bit and close right here. Then there's a lot of buying pressure. So there are a lot of buyers coming in. And the combination of these multiple candles can tell you what price action is possible to do next. If you come from a very bearish move and price is slowing down, and printing like green candles next to this, or indecision candles, green candles, it's showing that momentum is slowing down, then there's a possible reversal coming in to the upside. So that's why you need multiple candles. You can't just use one candle and base your trades out of that. So let's see what's coming next. Oh yeah, right. The candlestick names. So let's show this. A lot of people these days, they give a lot of fancy names to all these different type of candles or candle combinations. We do use a couple of them, which are the bearish engulfing and the bullish engulfing. But in the end, all it says is when you see this red candle getting engulfed by this green candle, it indicates that there's buying pressure coming in. So you might look for buys right here. Same with this one, the bearish engulfing. This bearish candlestick engulfs the whole body of this green candle, which indicates there are sellers coming in. And that's basically all we need. You need to know what it tells you. You don't need to know all these fancy names because that's just BS to me. We do use these two types, the bearish and bullish engulfing, for entry confirmations on our one of our strategies. But for example, these spinning tops, they reflect an indecision in the market, basically a doubt, not knowing sure where price is going to go to, because you have a lot of big wicks and the bodies are basically the same. So there's a lot of indecision in the market. A shooting star, for example, is just a candle that gets rejected very, very hard. So you have a very big wick to the upside and a very big red base, basically. Same with the hammer. There's a lot of buying pressure coming in because there's a huge black wick and there's a body to the upside. So that means that this move to the downside got bought up by the buyers. Then you have the doji. That's an example of a indecision candle, same like the spinning tops. Simply you don't really have a body, but you have a lot of wick, so price doesn't really know where to go, and there are buyers and sellers into the market. These evening star and morning star combinations are basically just a sign of a reversal. As you can see, you first have a very big bullish move, which might hit a resistance area. From there, it doesn't really know where to go because there are both buyers and sellers coming in. From there, you have the bearish engulfing, which engulfs the whole body of this this indecision candle, which basically indicates a reversal. Same with the morning star, but then in a bullish confirmation or a bullish style, you have a very big red candle, which indicates a lot of sellers coming in. Then the next candle shows you indecision. So this indecision might indicate to you like, yo, maybe if we get confirmation right here, maybe we are up for a reversal to the upside. And still you want more confirmation, and this is the confirmation it gives you. It gives you this big green candle, which engulfs the body of this engulfing, which indicates now a reversal. And also what you can maybe notice right here is a inverse head and shoulders. And but that's a whole different thing. Same with here. This is a head and shoulders pattern, and that pattern maybe can indicate a reversal. And then we have this 3 soldiers, 3 crowds. Like, really, I don't care about that. That's just very bullish price action and very bearish price action. So to wrap up, these names don't say anything to me, and I don't recommend you to learn them out of your head. It's simply more important to know what they actually mean and actually are telling you. So those were the basics, and that's fancy names. And yeah, now I want to go into a real market example. For example, if you zoom into this price, we have a 50-minute time frame. So let's replay it a little bit to right here. So this 50-minute candle, which opens right here and closes right there, let's draw it from the top to the bottom. So now, if we go to our 5-minute, you will have 3 candles inside. If we go to our 1-minute, there are 15 candles showing you information inside. And that's why it's so important to use a set of time frames, because you need insight into that higher time frame candle. And that's why we start with a higher time frame analysis and then tune down to a lower time frame to base our entry on, because you have more insight on the lower time frames. So I hope that's clear. Of course, it's not perfectly like I just said. I can't draw solely this whole candle because it starts in the middle of this candle and the middle of that candle. So when I tune down and I say like 3 candles inside, just use these 3 candles. This 1, 2, 3. So if you go back to our 50-minute, you can see right here, and let's delete this. This candle gets engulfed by this red candle, which maybe indicates there are a lot of sellers coming in. And still we don't solely use that to our entry, because we also use other confluences, like for example a sweep, imbalance, etc. You can see right here, it swept this internal range liquidity, it's filled some imbalance, and from there we had that confirmation. So from here we can, for example, use base a trade on what the candles are telling us right here. For example, if we place a trade on this engulfing candle and the break of this right here, which is a market structure shift or a change of character, there we could base our entry on. And as you can see, there is bearish momentum incoming. And right now it's basically a little bit of consolidating, and eventually it stopped us out. But that's why you need multiple time frame analysis, and you need multiple confluences to base your trade on. You can't simply say like, yo, we have a imbalance From that imbalance we have an engulfing, so price must go down. In the end, it's all probability and nothing is sure. But this is about candlesticks, and we use that in combination with other confluences. Maybe we have an example that will play out. Let's give me a clean example. Just a quick one. Maybe I want to go to a lower time frame and get rid of this for a moment. Or maybe I just give you guys my trade from yesterday. It was a very textbook trade, very nice. These are all other confluences for me. We have a sweep, we have a nice zone with imbalance, and it retraces back into that. We have a downtrend. So from here, we tap our zone. From that zone, I want to have confirmation, but on a lower time frame, because I have more insight on a lower time frame. So let's replay this. From there, from that lower time frame, I have more insight, so I can see like, yo, we did respect this upper zone, and then we created liquidity to the downside. From there, we have two possible zones, which is basically a like a very bearish candle right here. We have imbalance, and we have internalized liquidity, which is my extreme zone. And then we also have an indecisional zone, and I will go over these in the coming videos. But for now, this is a candlestick video, so it's not really important at this moment. But you can see right here, if we zoom in, this bearish candle engulfs this basically bullish candle, which got rejected like crazy, which is a bearish sign. So this, with in combination this imbalance, forms my extreme zone. And I mark this out, but it doesn't have to hit it. So I also mark up this indecisional or this decisional slash fresh zone. And again, right here, you can see a lot of sellers are coming in. So this is also an indication like, yo, if we close like this bearish below this previous candle, this might be an entry for me. And as you can see, I took my entry right there, and also on this this liquidity, because that's an indication price can go lower. And from there, I basically wrote this whole trade to the downside, targeting this low, which gave me like an 11R. And with a 1% trade, this was, I believe, like a 7-8% trade. Also because we take partials along the way, because it can also reverse from here, for example, or tap me out break even. So these are basically the basics of the candlesticks. And don't get yourself confused, like I said, with all those crazy names, because that really doesn't matter. All that matters is you know what the candle is telling you, and you know that you, with having that one candle telling you something, you will have to go to a lower time frame to have more insight and base eventually there your entry on. So yeah, that's basically it, guys. I hope you liked this video. Please like and subscribe and hit the notifications bell. Please leave a reaction below. And let me know your thoughts, because I read every single comment, and these comments also can help us grow our channel and provide you a lot of more information and new videos. So guys, thanks for watching. I hope to see you on the next one. I hope you learned a lot from this one, and I'll see you on the next one. Ciao, ciao.